Hello, my name is Marc Puckett. I'm the Assistant Town Manager in charge of Finance and Administration for the town of Apple Valley. And I'd like to talk to you a little bit about how the town can finance the acquisition of the water system within the existing rate that you are now paying as a Liberty Utilities customer. This is Liberty Utilities service area. Only those existing customers within that service area will be affected by the town's acquisition efforts. If you do not live within Liberty's existing service area, you will not be affected or impacted in any way. If you live in Golden State's water system, if you are served by one of the community service associations, or even if you live within this area and you have a well, you will still not be impacted. Only those existing customers of Liberty Utilities will be impacted in any way at all. The question has been asked, will my taxes go to pay for the acquisition? And the answer is no. Property taxes cannot in any manner be used to fund the acquisition or any bonds issued to acquire the water system. The debt service on bonds issued would be paid exclusively from water system revenues. So what is the value of the water system? As you can see, there's a range of values presented, $50.3 million to $88.7 million. But let me draw your attention to the December 2015 value of $85.7 million. This is 1/3 of the purchase price paid by Liberty Utilities to acquire the Park Water System from the Carlisle Group. And it's 1/3 because the Park Water System consisted of 3 similarly sized water systems, one in Missoula, Montana, one in the LA County Basin, and Apple Valley Ranchos. In November of 2016, a short 6 months ago, Mountain Water was acquired by the city of Missoula, Montana through eminent domain for $88.7 million. We believe that these two values are most illustrative of the values that the town is likely to pay. How do we intend on paying for any bonds that are issued? The source of funding comes directly from Liberty's annual report issued in April of 2016 for the period ended December of 2015. And we're using the 2015 annual report because Liberty has not yet issued their 2016 report. It's due March 31st of each year, but as of today, May 10th, the report has not been issued. In 2015, Liberty Utilities received from customers $4.3 million. In addition to that, they paid about $4 million in taxes. Subtracting out the town's property taxes they paid to the town of $350,000, that leaves about $8 million available just between profits and tax savings available for debt service, capital improvements, or to lower rates. Add to that the anticipated corporate office savings of $2 million, and this is for Liberty's corporate office in Commerce, California. Also included in this number is expenditures that our customers pay for Yermo Water, which is 35 miles north of Apple Valley. In addition to that, the town will not be offering employment to the top 6 executives in Liberty Utilities. That would provide savings in salary costs and profit sharing that they receive. Also, Liberty Utilities has what are called intercompany service agreements. These are administrative agreements between the subsidiary companies and their parent company, which they entered into at cost plus a profit, in addition to the profit that's provided by the CPUC. All told, within the existing rates that customers are now paying, there are just under $12 million in savings. That's a significant number. That equates to 51% that customers are paying today above the cost of water, or $602 per customer. That's available to pay the debt service, lower rates, or pay for additional capital improvements if it's deemed they're necessary. So what would the debt service on bonds, acquisition bonds that the town would issue cost? This slide represents a variety of scenarios for issuing bonds and the cost of the debt service at each of those bond sizings. The first column represents debt service for different bond sizings at 2%. 2% is the cost of borrowing that the town could achieve if the town were successful in getting funding from the California State Revolving Fund. This is the same source of funding that the Victor Valley Wastewater Reclamation Authority received when they were financing the sub-regional water treatment facilities in Apple Valley and Hesperia. The VVWRA received $100 million in state revolving fund loans at 2%. The town has received initial indications from the state revolving fund loan that they would be receptive to the town's application for these funds. The second column relates to issuing bonds at the current market rate of 4%. This is the rate of interest that the town can achieve currently with the town's A rating, which is 4 rating grades higher than Liberty Utilities' existing bond rating of BBB-. The third column represents that rates may rise and what those rates might be for tax-exempt municipal bonds if they did. And we believe that the rates would not go beyond a conservative rate of 4.75%. Each of these scenarios have been prepared for the town of Apple Valley by Barclays Capital. Barclays Capital is one of the largest underwriters in the United States. Each of these scenarios is based upon issuing 30-year tax-exempt municipal bonds with approximately equal debt service payments, including no capitalized interest, using the town's A bond rating and including a bond reserve equaling the highest annual debt service payment, and assuming no bond insurance, and including all costs of issuance, including acquisition costs. So, will there be a rate increase needed? Absolutely not. No rate increase is needed to acquire the water system. The town has identified sufficient savings within the rates that customers are now paying to fund the acquisition costs, pay the debt service on the bonds, pay for any additional capital improvements that might be needed immediately, and fund rate reductions. Even if the savings were not $11.9 million and were only $10 million, the town believes that we will still be able to reduce rates. Assuming a valuation of $100 million, issuing of bonds at 4%, the annual debt service on those bonds would be $6.5 million. Assuming savings of $10 million, that would leave available $3.5 million to reduce rates. That $3.5 million amounts to $178 per customer, or 15.2% of what you're now paying. So what have the experts said? Peter Buffa, Director of Public Finance for Barclays Capital, said, "Our desk thinks that a reasonable estimated rate for an A-rated 30-year muni bond issued today is 4%. The analysts came up with this graph that shows both absolute levels and credit spreads over the last 8 years, which makes it obvious that any claims that the town is going to be looking at rates of 10 to 12% a few months from now is very unrealistic." And in fact, in the last 30 years, municipal bond rates have not even approached 10%, let alone 12%. The town can issue debt today at 4%, and we don't expect that that rate would be any higher than 4.75% prior to issuing the acquisition bonds. So in concluding, the town can purchase the water system within the existing rates and will have sufficient resources available to decrease rates possibly up to as much as 15%. Thank you for your time.